Good afternoon and welcome to the Plant Healthcare PLC interim results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Jeff Tweedy, CEO. Good afternoon.
Thank you, Paul, and good afternoon. Jeff Tweedy, CEO of Plant Healthcare, and I'm here with
Jeff Hovey, CFO.
Yep.
Happy to be here.
So it'll be the Jeff and Jeff show. Right?
All right.
Thank you. So we look forward to speaking with you today and answering questions. We plan to really cover our highlights of the first half of the year and talk about prospects for the full year. So on the executive summary, our revenue was up 1%. That was really driven by sales in Brazil. Our Brazil has had a great year, which we'll cover in a little more depth later on. Cash at the end of June was 5.7 million. What's really important for us, and I think these are the things that really give us confidence in the full year, is that we've had strong on-ground sales. Even though the first half from our revenue wasn't what we expected, we've had good consumption in the U.S. And in Brazil. Pretech is our new platform that we've launched, and I'm excited to say we are now selling Pretech on 3 continents. So just 3 short years ago, we started the really moving the Pretech products from discovery and research into commercialization. We launched Ibrana. This year was late in the U.S. with Wilbur Ellis, our partner there. But we now are selling Pretech on 3 continents. So that's an amazing accomplishment. And for our next peptide, PHC 68949, we've gone through the first stage of approval in Brazil, and we expect that we'll receive registration by the end of this year or the first part of next year, so we'll be able to start marketing that product in the 2024 soybean use season. Our soy grew very nice in Brazil, up to 1.1 million.
Ladies and gentlemen, just do bear with me once.
Important and what really separates us from scaling our business. We plan to expand into Poland, France, Cyprus, and India very shortly. And then we would like to further expand in the EU and explore options in Asia as well. Now, just a little bit about the market. It's been a very challenging market this year for ag. We've had high interest rates causing growers and distributors to delay purchases. Distributors have been destocking inventory, which has impacted price and volatility for a lot of our competitors. Growth outside the U.S. has helped us grow our revenue marginally. We maintained our profits, and Jeff will share some of the information. But the overall market has seen a significant decline in the first half. I think I read from one of the competitors that it's estimated that the market was down almost 20%. So given the headwinds and the fact that we grew and outpacing what the market is, we feel very good about that. As in past years, in 22, our revenue was up almost 40 in a market that was up 16. So we feel good about our full year prospects, which we'll cover later on. But it has been a very challenging market in the first half of this year. And just to give you a quick overview, we've really done a nice job of scaling this business globally. We now have operations in the U.S., Mexico, Brazil, with launches expected there. In Europe, we're very happy about the Harpin registration that was achieved at the end of last year. So that's going to allow us to really expand into Europe, countries we haven't been before. In India, we announced earlier in the year the partnership with Novozymes. So when that registration comes late this year, early next year, we will begin selling Harpin into the sugarcane market in Brazil. So we have significant presence. We really target these large row crop markets globally, whether it's soybeans, corn, or sugarcane. with our distribution partners. And I think that's what really separates us from our competitors.
Okay.
Turn it over to Jeff.
All right. Thank you very much. Okay. So our revenue was up 1% to 5.6 million. As Jeff alluded to, the first half of 2023 was a rough one for the ag business, with most agricultural companies showing significant revenue decrease. The U.S. in particular, with a lot of distributors taking measures to reduce their inventory to deal with price volatility as well as slow demand. But I'll go in the next slide. I'll go into a little bit more detail on our overall revenue platform. The gross margin decreased 1%. This is due to two factors, really. One, as I alluded to earlier, the U.S. market was down pretty substantially for us. We sell mainly Harpin into that region. As you can see from the slide, our margin of Harpin is 72% or more. As well as we saw a little bit of increase in our third-party sales in Mexico. So those two factors kind of dealt with a 1% decrease, but we still expect to see margins in line with full year expectations. Our Harpin margin did increase 4% to 72%. This is two reasons for that. One, we're starting to see the impact of the moving of our toll manufacturing to our European manufacturers, as well as some price increases in certain regions. Our cash operating expenses decreased 1% to 5.1 million. The management team as a whole has made a concerted effort to keep our operating expenses in line, and we did that by keeping them pretty much flat year over year. Diving into a little bit more, we did increase our sales and marketing expenses by hiring additional personnel in the U.S. and in the EMEA region to continue to grow that region. And we expect to see additional revenue from those hires in probably the first half of 2024. We did see a reduction in admin expenses of around 5%. That continues to be a goal of Jeff and mine, as reducing our admin expenses globally. And there was a little bit of impact from the peso appreciation versus the dollar. So looking at the full revenue, as Jeff alluded to, we're trying to diversify our revenue, and I think we've done a good job of that. Probably 2-3 years ago, the Mexican business was 55% of our overall revenue. It is now about 25%. So inevitably, there's going to be weather events or some other issue that's going to affect our revenue in a certain region. So we're trying to put processes in place and grow revenue in certain regions to deal with the risk and basically de-risk those issues. So as I said earlier, the revenue is up 1% to 5.6 million. Looking at the North American region, that was down 56%. Once again, that's mainly due to the reduction of inventory projects for the distributors. But we're encouraged by the increase in our on-ground sales of Fast-Stand and Employ. Fast-Stand was up 9% and Employ was up 35%. On-ground sales is basically sales from our distributors to our growers. And when that increases, that gives us comfort that product's moving and that we'll see additional sales, certainly in the second half. Our South American business grew almost 50%, led by Sayori, about 38% or 1.1 million, as well as continued expansion of H2 Copla into the sugarcane processors. Similar to Fast-Stand and Employ, H2 Copla grew about almost 30%. Once again, that gives us comfort with that region. The EMEA region was flat year over year, pretty much due to drought conditions. The Mexican region was actually up 12% to 2 million. A couple of things there is one, there's continued expansion into the agave and avocado markets. But we're also encouraged by the fact that growers are beginning to purchase more Harpin. Harpin sales in Mexico year over year increased almost 60%, and that's good for the margin in that particular region. And five-year CAGR with Harpin is still 20%, with all regions showing double-digit growth. So looking at the balance sheet and cash flow, our inventory decreased 10% to 3.1 million. Inventory is a hot topic for the management team. We're trying to manage that and keep it as low as possible. And by moving to our European supplier, we're able to do that. By moving to the European supplier, we've done a couple of things. One, we're able to purchase smaller quantities more frequently, anywhere from 5 to 6 tons. Whereas when we purchasing product from our Chinese supplier, we're taking 15 to 20 tons. It's also allowed us to ship directly from our European supplier to its subsidiaries, and that's helped with shipping costs. And finally, the move to the European supplier has helped increase our margin about 20%, which you'll see more of the effect of that in the second half of the year. Looking at accounts receivable, that was up $500,000 to $1.9 million. Most of that is due to the delay in payment of a U.S. customer. We're expecting payment in June of this year. We expect payment next month. We're actively engaged with that customer, and there should be no issues. We expect that payment, like I said, next month. Our cash burn was up 14% to $3.2 million. Once again, that was mainly because of the U.S. customer delay payment. Had we received that payment, both our accounts receivable and working capital and cash burn would have all been lower year over year. I do want to remind everyone of our seasonality of our revenue. It remains consistent. Typically, our revenue is anywhere from 35 to 40% in the first half, the second half being the difference. That trend is going to continue this year. And finally, looking at the middle column, our cash burn typically is considerably lower in the second half of the year. That's because of the revenue cycle as well as collection cycle. And we certainly expect that trend to continue this year. Finally, on the balance sheet, I won't go through this considering I just went through it, other than to say that the borrowings number of $752,000, that's all due to the effect of IFRS 16. We still have zero debt at the company level. If anybody has any questions on the balance sheet, happy to answer that during the Q&A session.
Thank you, Jeff. Just to remind the audience, we play in the biological sectors. There's really two markets we think about. First is biocontrol, the other one is biostimulants, and we play in both of these. And why this is important is these markets are really growing rapidly and have been for a number of years and projected to grow in the coming years. And it's really driven by the demands for food security, sustainable products, but also what's going on with climate change. So we're still very optimistic about the products, and we'll talk a couple of those in a minute about where they would fit and why we're confident in getting to our 30 million by 2025. So think about our products in two buckets. We have Harpin. It's a product that's been around for a long time. It helps resist disease and stress, which provides for higher yields, quality, and return on investment for growers. So we've had significant growth. As Jeff mentioned, the last 3 years, we've seen 30+% growth of this product. It's been around for a while. The new technologies, the pre-tech, first of those was PHC 279, which is on the brand name Saori. These are natural proteins that are very environmentally friendly. We've got very quick reviews with the regulatory authorities due to the safety profile. They're very compatible with mainstream ag, which is important. A lot of these products that in these markets are not compatible, and they're used complementary alongside them. So with Saori, we launched it in 2021. We've generated almost $2 million worth of revenue through 23, and we're very excited about the prospects for next year. Abrona, we had our first launch this year in the U.S. It came very late due to the timing of the registration, but we did get some out and really expect next year will be consumption. We'll see significant consumption in 2024. And then Prezyme is the other one that we sell into Europe. It's a pre-tech, so we're now selling our pre-tech products on 3 continents. I'm very excited as we've seen the results of 279 or 949. PHC 949 is our nematicide. First registration will be in Brazil. I'm actually headed down there in a couple of weeks to meet with the team and also discuss launch plans, potential partners, things that we're really doing to get the market interested. It's a huge market. Over 25 million hectares just in soybeans are infested with nematodes, and so it's very significant. We also did receive a registration approval of PHC 279, which is under the brand name Sori for soybeans. It'll be launched into sugarcane and sugarcane for orange rust and coffee for leaf rust in 2024. And then we have a pipeline of other products. PHC 404 and 414 will be the next set of peptides that we'll be bringing to the market in the coming years. One of the things that really has helped us scale this business is our strong partnership with distribution. We have Wilbur Ellis in the U.S., Nutrien in Brazil, Coplacana, a long relationship with them in Brazil and sugarcane, Agri in the U.K., Agar, who's a new partner in Argentina for us, and then Novozymes. We recently announced that for the launch of Pretec Harpin into sugarcane in the Indian market. And this really separates us out from our competitors. We believe this helps with spread our risk, but also keep our cost base low because our partners are investing alongside with us. And we have very, very good relationships with all of them. A little bit on the geographic breakdown in the U.S. We're really focused on row crops and specialty crops. Especially would be trees, tree nut and vine, citrus, row crops, corn, soybeans, and cotton. We've launched Harpin. Now we've launched Abrana into these markets. We believe that there is significant growth in the U.S. market with Harpin alongside Abrana. Our on-ground sales are up, as Jeff mentioned, which gives us confidence in the second half of the year. And we're awaiting on the approval of PHC 949. It's expected that we'll launch that sometime in 2025, depending on regulatory approvals. Again, we've seen very good results working with Wilbur Ellis. We have a relationship with them on a joint development to bring this product to market. And they continue to see very positive results from this year's field trials. Next, South America. We've come a long way. We really entered this market in 2018. We've launched Harpin in sugarcane, Sori into the soybean market. We're waiting on approval or waiting to launch the 279 into coffee and to sugarcane. We've got discussions going on with partners right now, and we expect to name those for the 2024 use season. And then 949, which I mentioned earlier, fantastic results. This is a very significant market. I just looked at some market research over the past week, and there's more biologicals that are used in soybeans for nematode control than non-biologicals, which is quite an interesting phenomenon. So we're excited. We think that we've got very good technology and some very good differentiated versus the biological products that are out there today. We just need the registration. I would point to one thing again that gives us confidence. Our on-ground sales first half are up substantially year over year. 27% of that on-ground sales is with sugarcane processors, which we've made a very concerted effort to reach. If you look at the on-ground sales first half versus second half is much more consumption from the sugarcane processors just because of the way the crop grows. So typically first half is less, second half is much larger. So this gives us a lot of confidence going into the second half of the year and the ability to reach our targets. Next is EMEA. We have a lot of activity in EMEA this past year with the approval of Harpin in France. That really opened up a number of countries where we were not selling today. Our focus has been in Spain, Portugal, the UK, parts of Africa, South Africa, and Morocco. We also sell product into Turkey. The crops have been potatoes, rice, citrus, and glasshouse. We'll be moving to expand into more potatoes in these countries like Spain, or I'm sorry, France, Germany, and Poland. And then I mentioned earlier the opportunity to sell Harpin into the sugarcane market in India. It's a large market, and Novozymes has a strong presence there with the sugarcane processors. So we're very excited about that. We did launch Pre-Tech as a product called Prezyme into Portugal this year. We plan to expand that into other countries for the 2024 season. So along with Harpin, we've now got a larger portfolio of products that we're bringing into Europe, and there's a lot of opportunities. This is the largest biological market in the world. So we want to make sure that we focus on the right crops, the right countries, but really expand the business and our partnerships in the EU. Lastly, Mexico. This is the business that we've had the longest, and the Mexico team has done a really good job of growing the Harpin business. Most of our sales today are third party. Our Harpin business has grown substantially year over year, and we just made an announcement that we've submitted for approval both peptides, PHC 279 and the 949, into Mexico within a month. So we're very excited about those opportunities. It likely will receive registration by 2025, it may be sooner, but that's the target that we're looking at. And again, we're going after crops like tomatoes, peppers, berries, cucumbers, along with avocado and agave. So our goal is to really move to more proprietary in Mexico to not only improve the margins of the business, but also just bring our technology into crops that we know have a substantial presence. So in summary, this sustainability sector it continues to grow. Even though there's some headwinds in 2023, we still believe this is the place to be, where the investments are going to grow, and where growers are going to spend their money. We have proven products. We've made significant investment in the Pre-Tech technology. We are now ramping that down as far as registrations and really turning those resources to the commercial side to deliver the 30 million by 2025. We've got a lot of growth opportunities up here that we focus on, and we believe that these are the ones that will help us get there, along with our partners that we have today. We do have plans to add additional distribution partners over the coming months and years to really spread out our distribution and expand our market presence. So in summary, we've really done a good job of scaling the operation, and we've done it through, we have sustainable products, we've done it through market access. As Jeff mentioned, the lower cost of goods. We made a switch to bring all the manufacturing to Europe 2.5 years ago, and we're now starting to harvest that. You can see it in our gross margin. Pre-Tech, we're now selling on 3 continents, and I don't think people really thought about that until we really sat down and we discussed it as we were putting the slides together. Like that's significant. In 2.5 years to get registration, sell on 3 continents is a major hurdle for a small company. We have major launches planned every year, which we've covered those. We've had significant growth this year at Saori, launch of Abrana, Pre-Tech in the EU, and we've accumulated sales over that period of a little over $2 million. We expect that to substantially grow in the coming years. Jeff did a good job walking us through the continued working capital improvement. That is a major focus for us. If I look at some of the balance sheets of companies in the first half, revenues down, margins are down, inventories are up, and receivables are substantially up. Those are not good numbers and things to have in a business that's a healthy business. So while we had some headwinds in the first half, we really feel like our balance sheet's strong, and we've made the right decisions for a strong performance on a full year. We do expect a strong second half. We've had good on-ground sales, and our customers are burning down inventory, so that's really positive for us. So that gives us the confidence to deliver on the full year results and to get to cash break even, which is our target within our existing reserves.
That's fantastic. Thank you very much indeed for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the top corner of your screen. But just while the team take a few moments to review those questions submitted today, I'd like to remind you that recording the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, guys, we've had a number of questions, both pre-submitted and throughout today's presentation. And thank you to all the investors for submitting those. If I may just ask you to click on that Q&A tab, start at the top, read out the question and give your response. And we'll bring you back up on the camera.
Okay.
There you go. Thank you.
Good. There were some pre-submitted questions, so we'll pick off a couple of those and then go to some that came in. It says Plant Healthcare predicts significant profitability by 2025. Let's say you achieve this. What will you do with your profits beyond that? That's a great question. I think one of the things that we want to do is, once we get to cash break even, there's an opportunity to go back into the portfolio and bring other peptides to the market. We see significant opportunities where markets that we could be in with a different peptide, or maybe a peptide with a different customer who has interest. So our goal would be to begin harvesting those, but only after we achieve cash break even. It'll not be before that. Next pre-submitted question, what is your Seattle lab working on at the moment? Good question. We have a team of 8 scientists that work out there with our Chief Scientific Officer, Zongmin Wei. He's the founder of the technology. So they're working on a number of things, more to support what I would call commercial operations. So there's work going on COGS improvement for all our products. We are currently working on some pilot plant production of the 949 to support the Brazil operations in a limited launch, assuming that we would get a registration early. They're also working on the scale of manufacturing of that. They do supply a lot of support to our field and technical sales teams around testing. We might do product testing. We have the ability to do some testing in the labs there. And then, really thinking about what products that we bring out in the future. We haven't started that yet, but we have had discussions with the team. So it's quite busy. It's a small team, but we do keep them quite busy. Next question is, does PHC 949 work on slugs? I've not been asked this question. It's interesting. Slugs typically are more in the home and garden type environments, and that's not where our focus has been on testing or any partners that we've been working with. So I'm not sure that I know the answer to that, but if we were ever to enter those markets, that would be a target because it is very important. The next one's from Roger F. What guidance are you giving for R&D expenditure over the next couple of years? I think we are ramping that down, as Jeff mentioned earlier. We've really put some tight controls on R&D as well as our admin cost. So we want to continue to ramp those things down and shift our focus to more the commercial side of it. There will be certain things that we'll need to do from a registration standpoint, but I think our big expenses around registrations have been spent now. And so now we need to harvest that from a revenue. Andrew C. had a question here. Could you please mention what product Fast-Stand is? Fast-Stand is a product, it's Harpin along with the fluency agent that is sold into corn. They apply it to the seed of the corn in the spring, and it helps, the fluency agent helps the seed flow through the planter better. So you get increased planting consistency. And then the Harpin is coated on there. So as the seed emerges, that Harpin provides protection to the corn plant. We see substantial, significant yield increases, especially when a crop is under stress. Corn early it can be droughty, it can be cold, it can be wet. And so the harp in there really helps that plant grow through the stress in that early season. We have another question here from Martin. It says, how have sales of Abrana been since the agreement in June? Are you expected to ramp up in the second half? So we got the registration fairly late. We had the federal registration, you get the state registration. So we did have some limited sales that went out in June. We did miss a majority of the corn crop. There are opportunities for crops like grapes and some other specialty crops outside of California. We still are waiting on the California registration, but we expect most of that would begin next year, Martin, as far as the ramp up. The next question is, what are the market expectations that you expect to meet? Well, we have, Cavendish, who is our broker, has set the target. I think it's slightly over 15 million for this year is our target. We do expect to meet that. That's over, as another question points out, that's 10 million in the second half. That is quite substantial for us, but we feel good about it because our customers in the U.S. have really decreased their inventory and the on-ground sales are up. Our Brazil business is up substantially, and we're coming into the broader use season for harp in sugarcane. So we expect that to continue, and the sales in sugarcane have been very positive throughout the year. And we've really made inroads with the processors. Most of our sales in the past have been going on with growers. We really hadn't made inroads, so we've made some changes in our go-to-market in Brazil about a year ago, and now that's starting to pay off in growth with these processors. What happened with Argentina and the drought? This question was from Simon. Yeah, there was significant drought in Argentina. We have a very small market there. Most of our sales in Argentina are kind of in the northern geography, so they weren't nearly as impacted as some other parts of Argentina. And it's been, we just started selling into that market last fall. So it's small to begin with. So we haven't been impacted nearly as much as other parts of Argentina. And we didn't have a large expectation for sales this year. This is another question from Roger F. What, if any, seasonality of sales into the Brazil sugarcane sector? Yeah, as I mentioned earlier, typically most of the sales that we see from an on-ground perspective happen in the second half of the year, and it's just the way that the varieties and when sugarcane is harvested, typically we would see less sales in the first half. But given our sales were up, we're very happy about that and feel good about our sales in the second half. I can tell you we're off to a very good start in the second half already on ground, and our sales to Copacabana so far. So we think we're going to have a very good year in Brazil. Another question from Roger F. Says you refer to significant market headwinds in South America. What are they? Sure, Argentina was difficult, but given soya harvest in Brazil, we thought you'd had tailwinds. That's a great question, and it's more than soybeans. It's really all the crops. The big issue that are facing growers there is the interest rates and the cost to get money. So what we've seen, and we've seen it in other parts of the world too, the U.S. would be another example, is growers are buying. They've gone through 2 years of product shortages, not ours, but others, and higher prices. So really price inflation. So prices started moving the other direction back in the first part of the year. So what growers have done is, because it's costing more to access money and prices are going down, they're waiting to buy until they have to, and they're buying only as they need. We are seeing that in sugarcane. We saw the first half of the year where they're buying less, but they're buying multiple times, but just as they need it. So I think that's one of the impacts that we're seeing, and likely we'll see that for at least another 12 months. This is another question for Roger F. Can you remind us in the U.S., when do you need federal and state approvals? It's a good question. We typically, if it's in a row crop, you would want to have your federal approvals like end of the year, and then some of the states take anywhere from 1 to 3 months. So that would give you time to get the state approvals and then get into those states. Now, states like California and New York take much longer. I know companies that are waiting 3 or 4 years for registrations in California. So it's a completely different time frame. The other thing is that the seasonality depending on the crop. So typically you'd like to have everything from a federal done at the end of the year, then have your states ready to go in Q1 would be ideal. This is a question from Martin H. What is needed in terms of further certification or distribution agreements to hit the 30 million in revenue? That's good. I mean, good question. I think as far as the registrations, we have put those in place on a global basis. So I don't think that there's anything that we need from that standpoint. I think most of our registrations have either been submitted or achieved. We did announce 2 distribution agreements this year already, and we would like to announce several more, to be honest with you. 2 to 4 a year, I think, would be what we would like to have. I think the significant ones for us going forward is a distribution in Brazil for PHC 949. That will be a substantial market to get into. And it's a market that already is used to using biologicals for nematode control. So we expect a very rapid adoption there as we ramp up and generate sales in Brazil. Given the massive increase in interest rates in the U.S., is there, if any, is there the risk of customers becoming a bad debt or pushing payment further back? Yeah, I think that's always a question that comes up. What gives us confidence and where we've really been moving the business the last couple of years, and not only in the U.S., but really all over the world, is our relationship is with very large distributors. And so, large distributors have access to money, have access to cash, and we're not worried about them running out. Now, they may want to move it back some period of time, a month or 2, or over some date line, but I think the risk of not getting paid is pretty minimal.
Yeah, and I'll add to that. So this customer in particular has been with a customer of Plant Healthcare since I've been here, and I've been here almost 10 years now. So I'm not concerned with that. I mean, it's a great question. But I also say that since I've been here, we've had only about $100,000 of bad debt. And that's because of our relationships, as Jeff said, with our distributors. So I'm not concerned about this particular U.S. customer getting paid.
Yep, I think that's exactly right. We'll take one more question here. This one is from Martin H. It says, do you expect to get to cash flow profitability without needing a fundraise? And the answer is yes. We did a fundraise earlier in the year to really help us drive our growth plans. And it was really for 2 things. Number 1, we wanted to add commercial people in specific geographies. And number 2, help us with working capital. As we start to build out the portfolio of, you've got Harpin, now you've got 279 on 3 continents, we've got 949 coming into Brazil. Now we've got multiple products that we're manufacturing. So we've done a really good job of managing our working capital, as Jeff showed in his slides. Our inventory's down, even with the expansion. We'll still keep tight controls on that, but our goal is to be cash break even with our existing reserves. And we feel very good about the prospects of growth. And with that, Paul, I'll turn it back to you.
That's fantastic. Thanks very much indeed for covering off all those questions. Of course, any further questions come through, the team will be able to review those and we'll publish responses where appropriate to do so. Jeff, perhaps just before redirecting investors to provide their feedback, which is particularly important, if there are any further closing comments.
Yeah, I mean, I would say in a market that, as I mentioned earlier, some have said is down 20%, we grew. Our objective is to outpace the market, which we've done. We feel good about the prospects on the full year. We've had good on-ground sales. We've done the right things fundamentally, from looking at our balance sheet, making the right decisions, and we feel good that we'll get to our 30 million by 2025. We have great technology. We have outstanding customers that we want to continue to add to that base, and we're really scaling the business to be a profitable business in an exciting space. And thank you for all taking the time today.
Thank you.
That's great. Thank you very much indeed for updating investors today. Can I please ask investors not to close this session? It should be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the team. On behalf of the management team of Plant Healthcare PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.